Y'all, today's video is going to be referring to the economic calendar and giving you a little more criteria for your discretional trading. Last video, we put things in a more systematic approach, and I'm kind of going to give you the logistics of what that means. As I begun trading at this point 4 years ago, right? You don't really understand what people are talking about. People talk about systematic things, people talk about discretion, economic calendar, and you're grasping what they're saying, but you're not actually comprehending of how to apply this to a chart. And so I'm going to try to reword it into ideas that possibly could clear it up more. I'm not going to be dropping a ton of information about how I personally am maneuvering my way through this all, because it's my understanding and it's my research that have gotten me there. But I'm going to tell you how to start, and I'm also going to show you how discretion should actually really be used. So first of all, I'm just going to look in the chart here, and these are the executions from today. There's actually another execution beforehand. There was a long inside of here, but I simply missed a liquidity pool on ES. And so then after that liquidity pool was then swept out on ES, I inverted the position, took my scalp to the downside here, parceling at these equal lows all out there, and then another entry here. And I just took a stab on some evaluations at this trade here. This was a more higher RR trade. Still a really good trade, but it ended up being just a break-even trade, obviously, as you see. Came back to me. But that's besides the point. But what I'll say about these trades here, you might be noticing, okay, these are kind of lower RR. If you've came from my TikTok, you might see larger trades. You might be seeing, okay, normally you might be limiting sometimes. Occasionally, I didn't think you're one-to-one scalping. And I'm just going to put this out there, is that this is because of my discretion, okay? And it's not just I'm randomly guessing, right? The discretion to manually alter my actual TPs and my system, right? Because even though I have my discretion, right, I'm discretionally deciding to trade a certain way. The way that I'm deciding is based off of economics, and it's based off of other data that I've gotten from these years of trading, journaling, and research. Okay, so it's not just I'm getting on the charts and I'm discretionally being like, oh, okay, today's going to be a day where I'm not exactly sure. I'm not going to hold runners, right? Like, no. Some people go about it like that, but that's not what I believe is correct. And this is where Forex Factory and specifically economics come into play, because economics, and you might be thinking like economics, like, okay, what does that mean? Well, I'm referring to anything related to Trump and the presidency, any releases around tariffs, any red folder news, and sometimes orange folder, because it depends on the news release. I'm going to urge you to really, really dig into Forex Factory, right? And I believe this was a mistake that I made and the majority of people make when they trade specifically price action. That everyone tells you like, okay, look at the red folder, look at yada, look out for news, but they're not telling you what's actually happening. On all of these news events, you should be able to literally read the title of it and understand what's going on. Like, you should know what is happening. Like, what is that? You have a UOM, like a settlement. Like, what is that? Do you know what that means? As we look through this, we have a flash manufacturing PMI, flash services PMI. What does that mean? Existing home sales. What does that mean? Consumer confidence. Can you tell me what consumer confidence is? Like, can you actually tell me what it is? I believe that's important, not only for long-term investing, but just you should know the intricacies of what is actually going on in the market. And then instead of just looking for these slight indications of, oh, okay, that's a red folder. Oh, okay, that's an unemployment. Knowing the back end of what's going to be released during these, it's knowing the exact number is not as important, right? It can be if you're swinging, or depending if you have create a model based on the data releases. But if you're trading more discretionally, understanding what that's going to do to volatility. What is that going to do to the tendency of the day? I'm going to reference, and I believe his name on TikTok is Delta Trading. And if you guys are from any of the ICT space, any TikTok, you've probably heard of Thomas, the quant guy, right? And he's back testing all these mechanical models, yada, and I'm not exactly sure how accurate they are. But what I will say is that he's implementing machine learning, right? And after implementing machine learning, you can see a drastic increase in the model's performance. And if you want to implement sort of that boost of performance of your model that you have, discretion in the machine learning is exactly probably how you should be treating this economic data. And you should be taking notes on how the day moved during unemployments, how it moved when we had these stacked red folders. How does it move on FOMC? How does it move before Jackson Hole, right? And not only the day before, not only the day currently, right? Okay, what happened during unemployment? Or okay, what happened during FOMC? You should also really, if you want the best accuracy, and this is the advice I'll give you today, is you should be referencing not only that, but you should be doing it as at least a weekly perspective. Okay, what did we do the whole week before this event? What did we do the day before? What did we do the day after? And as you begin collecting research on this, right, your research is going to be data that you can then implement in your discretion to modify how you're approaching the markets. And you're not just winging it, right? You're not just looking at the data and you're like, okay, I'm going to, FOMC had a huge range last time, so if I get an entry, I'm going to swing it. Like, no, that's not necessarily how you should be doing it. You should be gaining data, back testing the data, right, and the performance to look. And it's not that it has to be a home run hitting sort of idea. It shouldn't be a thing that's going to, change the game. What it's going to do is allow you to specifically alter your system. And when you alter a system, and this is for psychology purposes, it's not going to be a thing that, okay, I can just plug and play whatever I want here. No. It needs to be a set thing that happens every single time, right? So if you're going to take a systematic approach as a trader with your discretion involved because you want the highest accuracy possible, with the economic data, with red folder, you're then going to have your data and you're going to be implementing it systematically. And so on a day like today, these are systematic, right? Normally, I would say my trades are average around 3R. This is a systematic change. This isn't just a discretion, I'm just going to take profit, cut them early. No. This is a systematic change for the next years in the future, right? As I continue trading, this systematic change would occur every single time I trade a price tendency day like today and like a week today, right? And I'm not saying that to give you a hint on how you should trade because everyone's style and model is likely different to what you learn from, what you create. But I'm saying that is I believe if you add too much discretion, you start winging it, your data becomes screwed. And if you're not following a systematic approach of, okay, this is every time I make this adjustment, then, the returns, like the increased returns you're looking for from the discretion, from the machine learning, it's actually going to be less trustworthy. And then if you can't trust yourself, right, if you can't trust data, then what can you trust, right? You're basically just going out there and winging it. And this is going to be the most consistent way, right? If you want to trade full-time, trading full-time is extremely, extremely hard. Like if you have kids in a family, like imagine how stressful this is. You're clicking a button, are they going to eat this month, And, that's a little over dramatic, but I'm just giving you a real world example. And so systematically being able to have a system of how this affects your trading and what the change it makes on every single day, that's a good thing. And if you're not certain, right, you can fall back on your backbone core standards. Now, so as we look at Forex Factory, realize that all of these folders, right, whatever they affect, it's going to change volatility. And so when it changes volatility, and this is another underappreciated area in the trading space, is that the VIX, the volatility index, it's going to change. And so that changes your sizing. That changes your potential range. You see all these people trading right at open, trying to trade at open, get a limit, get filled. You don't know the volatility of the day. And so how are you going to say this is a calculated trade with proper risk management when you don't know how much volatility is about to be injected in the market straight off open. Like you have no idea what the range is about to be, like truly. Until obviously you have an opening range and you can make estimated assumptions about, okay, how big is the range, how big is the stop's going to be. There's all this stuff online about, okay, like they try to make trading seem easy. Realize that there's so much to trading that all of these little things matter. You want a system, right? Volatility is important, red fold is important, economics is important, range is important. All of these little minute things, and there's like tons, hundreds of more. I'm just not even saying because that's for a later date, and I'm not even mentioning probably because they're not even crossing my mind right now because I'm focusing on giving you guys a lecture. But all of these are little things that are going to affect the equity curve and actually affect if you can get a payout. You might be undermining them, like, oh, yada, yada. Like, you need to know in your brain when you enter a trade how much risk is on the table at a certain time. Am I telling you that you have to risk the same per trade? Like, no. That's going to be your system to decide and your thing to decipher. I'm not going to BS you like all these other people do and tell you, oh, you should be risking this amount per trade. Oh, you should be sizing up for this. No. Don't listen to people when they tell you that. Don't listen to these people. Right? If you have a singular mentor that's teaching you the exact way he teaches and he has verified results, then yes, you can trust that. However, I'm just a person that you likely found on YouTube and you don't actually know how I trade. And so I'm not in a position to tell you how you should be risking. A random guy on TikTok is not in a position to just tell you how you should be approaching your risk, how many trades you should be taking a day. It's on you because everyone's trading different stuff. If everyone's trading the same thing or people start trading similar things, alpha decay occurs and systems stop working, markets change because people are literally looking at the order books. And, everyone wants to argue with me like, oh, well, you're on prop firms. Well, actually, real profitable traders, first off, they normally have lives. And secondly, if you're doing good on a prop firm, just so you know, prop firms are selling all of your data to back-end firms. Like any sort of research analyst firms, they're reaching out to prop firms to hopefully get data. They want data of who is winning and who's losing. They want to be able to see another form of order books. You can't tell me someone on Wall Street that wants to get an extra edge, like an actual fund or someone with a connection to like Top Step, wouldn't be interested in the data. Am I telling you that, that's going to ruin the game and kill us all the retail? Like, no, that's not what I'm saying at all. I'm just saying you definitely need to be aware that this is hyper competitive. Hyper competitive. Trading is so competitive. And so every edge people want. They're like, oh, why do they care about retail? Retail is only 1% of the people that trade, yada, yada. Who cares about 1%? Bro, when you're managing billions of dollars, 1% is a lot of money. These people have no morals. You're trading against people with no morals. They don't care. They don't care who wins and loses as long as it's them. They will do anything to see you lose. You think these prop firms aren't corrupted as well? You think these people running these businesses aren't as well? And I'm not saying every firm is. I'm not saying every CEO is. That's not what I'm saying. But this is a very brutal space. And so you have to realize that. Now back to what I'm saying is that your system is going to be changing. And let me rephrase that. You're going to have a system, right? And the market's going to be constantly changing. And this is why people think discretion is good and our edge, is because as the market changes in each day, discretion can normally adjust to that. But once your discretion goes haywire and off the charts and you're not on a systematic approach, then it gets untrustworthy is what I'm trying to tell you guys. And I'm trying to help give you guys an actual income that's sustainable and you're not tripping, right? You might be, I don't know who's watching this, you're a starter trader, a year in, you're probably so anxious all the time, like, I have to make this work, I have to, like, bro, like, even when you get in the future, and maybe you've had quite a bit of payouts, and you're just trading discretionally with, like, no real data or system, and you might be making money, that thought's always going to be in the back of your head of, okay, what if this is luck? Okay, what if it's not working? Until you have an actual system and data to back it up. And then you're just fearless. I go in emotionless every single day. I just execute and I get out because I know that my statistics show that this is going to keep working. And that's why you see people that are normally profitable always working on other models as well or other little tweaks. In case something starts to dwindle out results, they can alter their system to begin trading in a different, I'm saying style, but a different system. So let's look at today, right? You know, we check FX Factory. Look at the date, 19th, Tuesday. No red folder. Just want to point that out. And then I'm going to point out yesterday specifically, the 18th. No red folder. See that? No economic data. And so if you want to look back at price during the last couple of days, and you know, this is a more basic idea that I'm telling you guys right here, but I want you to realize that this is not just applicable to No News Mondays, because this is the gem. If you stayed this far, this is the gem that I'm dropping, right? The economic calendar in which you're reading, you know, it's very normal and casual online to know that, okay, No News Mondays are more choppier. No News Mondays are more indecisive on direction. Well, I'm just telling you, there's a tendency that goes with every single red folder day, not in the week, in the entirety. Every single day that has economic data has a history of it occurring. And so when you look at that history and you start documenting what's going on and how the market is performing, you can begin to establish tendencies for all of these days, and not even for all of the days, but the day before as well. You know, if you want to find more information about that, go deep dive ICT. I'll continue dropping educational videos, and I'll probably start private mentoring again, but I'm not here to sell myself. I'm just here to give you the keys to the puzzle, okay? Especially if you're using discretion and price action. You know, you look at the Monday, no red folder, no news on Twitter, and there was nothing really going on with Trump, right? We had the meeting with Putin over the weekend, I believe, as well, which, if you just look at price, right? And I'm not even going to show you, because if you really want to learn, you got to just be able to find this. If you can't find it on your own, right? I'm giving you tips and hints, but you have to be able to think out of the box. If you can't think out of the box in this trading, you will not be able to keep discretionally adapting to what's happening, and you won't be able to level up your understanding of time. That's the biggest thing that's helping, is that you're not understanding, is that every single thing on FX, right? Or my fault, not FX. Forex Factory, all these economics, right? Those are time-based releases. Everyone wants to talk about how all these ICT traders are frauds, but all the real ones I know, because there aren't a lot of real ones, but there are some, they have a deep understanding of time, because there's time elements that people are missing, and you're not realizing that this is a time element right in front of your face. There's so many more other ones that are hidden in plain sight, that even if I told you one, that you wouldn't be able to continuously keep adapting to the ones that are relevant to price. And so you have to learn that you have to think outside of the box. So, you know, if we go, all right, you know, let's see, market open. What time it is? Sunday, 6 p.m. And to me, look at this range right here. See that? Let's compare it to actual Monday. And this is the New York Stock Exchange open. You know, essentially the same sized range during Asia versus Monday. And that's very predictable. Understanding that Asia is going to be have more volatility is very predictable, not only because of the Monday tendency and no news, right? You might be like, oh, well, okay, Monday's obviously going to be choppy, so it could be closer to this. Well, if you remember what I just told you, closer to the end of the week, Trump had a very important meeting with Putin, and so, you know, it's an estimated guess that we might get an injection of volatility, and then it's as simple as reacting to what is being shown right in front of your face. So, you know, I think that's a good start for today. I want to keep these videos relatively short on my YouTube, at least to start, right? I don't want to overwhelm people and give a ton, but I want to give you guys some real information. So if you made it this far, don't close out the video yet, but if you made it this far, because I'm still going to say something, but if you made it this far, good work. Keep putting in the work, because I'm telling you, 99% of people that clicked on the video are not hearing me say this part right here. They might have heard something during me talking, and they're like, oh, I already know that. Like, okay, this first part of the video was cool. Yeah, I already heard that, and then just clicked off. But if you made it to this part right here, you're on the right track. Seriously, you're on the right track, and really start digging in. You know, this is it. Look at this right here. Previous all-time high. That's a time-based concept. Time-based concept. The time that ICT and that these people are using discretionally without realizing that gives them success in the market with prop firms, payouts. It's in front of your face, and I'm going to start opening your eyes to it so you can use it more effectively and you can react and then be successful in new markets. I do believe that market conditions change, and I think they were going to keep changing, but that doesn't mean that if you can key your eye to time, that time in, they say time in price, time over price, and they're completely right. Time elements, they're hidden in plain sight, and once you can learn to basically capitalize off of them, no matter what is happening economically, what is happening during, war news, uncertainty, there's things that you can literally use that I probably haven't even happened yet. Like, there's probably and I'm just going to say PD arrays, right? Or price levels. There's levels that I have not even discovered yet, and they'll be shown to me as I go through, and I'm really studying what is going on economically, what is going on with volatility in line with crazy event horizons. If there's crazy events on the horizon, these are all indicators of what the market can do, and they can all be used as, different price points. So start collecting data, start really paying attention to Forex Factory, okay? You have to be able to understand that all these economics, not only the color of the folder, that's what I really want to stress, not only the color of the folder, but what is actually occurring. It's going to give you a layout for how you should approach the week, of how you should approach months, of how you should approach days. And once you have data on all of that, you can begin to slightly modify, tweak your system to better suit those conditions. And that is truly the discretion you're looking for. You're not looking for the discretion of, okay, well, I need to be able to pick the best fair value gap. Like, no, that's not what you're looking for. This is the discretion you're looking for. You're looking for the discretion to understand what the dynamic of the day is going to be. And if you do your due diligence and you dive in to price action along with these next level of economics and start note-taking, that you're going to find it. So, all right. I appreciate you guys for tuning in. If you made it this far, bro, pat yourself on the back and, get to work, but also enjoy your day. Appreciate y'all, and I hope this was helpful to give you a little insight on how you can continue to level up your discretion while still having a systematic approach of knowing, to trust the process, to trust your system, and you're not guessing, right? Have a good rest of your day.